There are so many different gap and go trading strategies, but one of the best that I see very few people talking about is the dip and rip. In this video, you're going to learn what exactly the dip and rip strategy is, how you can use it to find some of the biggest runners in the market every single day, and I'm even going to recap one of my recent dip and rip trades that led to a $1,284 profit in just 20 minutes. So this probably goes without saying, but because this is a gap trading strategy, the first step in finding a potential dip and rip is going to be finding stocks that are gapping up in pre-market. These stocks already have that pre-market momentum. They usually have a fresh catalyst, they have high relative volume, and this is all going to lead to being a bigger potential runner when the market does open. Now, what exactly a dip and rip is going to be when a stock does have that gap up, it dips then at the market open, gives us a bullish reversal signal, which can be something like support forming, higher lows on the 1 or 5 minute chart, stacked buyers on the level 2, and so on and so forth. From there, it's going to reclaim the VWAP and it's going to rip to new highs. And what we're looking to do with this dip and rip strategy is we're not trying to buy necessarily into the bullish reversal signal. We're not trying to buy into that initial dip. We're waiting for the VWAP to reclaim, ideally with a volume confirmation, because this is going to tell us that volume, demand, buyers are stepping back up and coming back into the stock as it's starting to reclaim the VWAP, which of course is a bullish signal that momentum is picking back up. From there, we can look to risk off of the lows from that dip. This is going to usually lead to a pretty small amount being risked on this trade, especially when compared to different breakout strategies. And for the target, in order to lock in at least partial profits, we can use the highs from the market open, and we can also use the pre-market highs. And I think it's important to note that you should be scaling out for this type of trade. We're not trying to sell our entire position right away into our target or right away into previous highs, because many times the dip and rip will lead to a breakout above these highs, and we don't want to miss out on all of that potential upside by selling our full position right away. So to give you an example of this, over the past week we had a stock AKAN, which was a pretty big mover. And this was one of the stocks that I traded. I was able to lock in a $1,284 profit from this dip and rip setup. And if we zoom in here to the market open, we can see as this stock gapped up, we get a quick small spike at the market open. It then immediately starts to dip, and we can see that as it begins dipping here and consolidating right around this $20 area, this is already a higher low that's forming above the opening lows. From there, we get a reclaim of the VWAP with a nice spike up in the volume, starts to form another higher low, and begins to then break out later in the day, leading to a really solid dip and rip setup. So I was buying this as it was reclaiming the VWAP, risking off of the lows from this previous dip, just under $20 per share, and I secured partial profits then as it spiked back up into those pre-market highs, holding a small portion then to actually be able to capitalize on the stock, then squeezing higher through those pre-market highs later in the afternoon. So the really nice thing about this strategy is that many times we are able to have a pretty small amount of risk for the trade. If we're using the lows from the previous dip, or even if we're using the morning lows, many times this gives you a better risk and reward when compared to buying into a breakout, whether that be an opening range breakout or a breakout above previous highs. So we're able to, again, keep our risk pretty tight while being able to still capitalize on a bigger move to the upside, especially once that breakout happens and volume starts coming back into the stock. And to give you another quick example, this is one that actually happened today. Today is Friday, May 1st. We see that QCUE is gapping up in the pre-market session. This has been a stock with a lot of volatility over the past couple of weeks, but it's gapping up today. And we can see right away at the market open, sellers take control of the stock, push it down, and we get our dip. From there, we get a quick bounce up. It starts to potentially try to reclaim VWAP here, pulls back, but it does not break below those morning lows. So even if you bought into this thinking that this was a VWAP reclaim, you should not have stopped out of the position, because we want to use these lows for our risk level on the trade. And that would mean that we would want to stop out only if it started to break down underneath those lows. It actually ends up holding, forming a slightly higher low, reclaims VWAP once again. We get volume spiking back up, some consolidation, and it ends up having a really nice run through the highs and through the pre-market highs later in the afternoon. So again, if you're trading this properly and you're looking for those confirmations in the VWAP reclaims, and you're also slowly scaling out of your positions rather than selling all of your shares all at once, this should lead you to a pretty solid risk and reward and you would have been able to capitalize on about 2 or 3 times the amount that you were risking on this trade with CUE. And I think this is a really powerful strategy to add to your trading arsenal, especially when paired with the opening range breakout strategy, because we're not always going to see stocks that gap up in pre-market and then spike right away at the market open, leading to those clean opening range breakout trades. Many times they are going to dip at the market open. Sellers are going to take control from that pre-market move. And while many people then take the stock completely off of their radar, ultimately, if they do start to reverse out of that opening dip, they can lead to a really clean move later in the morning or later in the afternoon, which is exactly what the dip and rip is based around. So all of that being said, if you like this strategy and you want to learn more about the opening range breakout strategy, which as I've mentioned, I think pairs really well with the dip and rip, we teach you that as well as just general price action reading, identifying key levels, managing risk, and so on and so forth in our free course that we have at Master the Market. All you have to do is put in your email address at the link down below in the description, and that will be sent to you right away. But regardless, thanks for watching this video. I hope you found some value in it. And if you did, please make sure to give it a like and subscribe to the channel. Let me know down below in the comments if you prefer the dip and rip strategy or the opening range breakout. Thanks for watching. I hope you enjoyed, and good luck with your trading.